shortfall is driving deeper collaboration between banks, telcos, and fintechs, replacing the old disruptor versus incumbent narrative. A new report by Briter and Lateral Frontiers shows that tighter regulation, reduced venture funding, and growing demand for reliable services are pushing financial players to co-create credit and payment solutions. Case studies from Kenya, Egypt, and Nigeria highlight partnerships such as the Citi Visa, Cellulant's supply chain finance tools, and valU's collaboration with Banque Misr. These alliances combine data disruption, distribution, and compliance strengths, helping address long-standing liquidity gaps. The study concludes that Africa's financial future hinges on interoperability, digital infrastructure, and regulatory stability. Bamidele Fehintoluwa, Head Merchant Acquisition at MoMo PSB, joins me now. Good morning. Thank you for joining us.
Good morning. Thank you for having me.
A pleasure. And how would you say that mobile banking apps are transforming financial access for young Africans compared to the traditional banks, or is the gap, closing in between the two?
Sorry, can you come again?
How would you say that, what's happening within that sector, traditional banks and fintechs, how are mobile banking apps transforming financial access, especially for young Africans compared to the traditional banks?
Oh, okay. Thank you so much. Traditionally, banking in Africa requires physical presence and extensive work paper, long queues. And for rural youth, this is a major barrier. Mobile banking apps like OPay in Nigeria, M-Pesa in Kenya, MTN MoMo in African countries, and Cheaper Cash across Africa have completely changed the game. They have allowed instant account opening without visiting the branch, often requiring only a phone number and minimal KYC. This is a shift, and it is critical because it brings financial services to millions who were previously excluded due to distance and documentation challenges. So far, essentially, mobile banking is not just an alternative. It is becoming the primary gateway to financial inclusion.
Interesting. A gateway indeed. And what are some of the key features that are making mobile apps more appealing to Africa's next generation of entrepreneurs and consumers?
Okay, so a typical young Africans, we value speed, we value convenience, you value stability and affordability. Mobile apps, deliver quite a lot of things, ranging from the instant onboarding without, any paperwork to low or zero transaction fee for some fintechs, and which is also vital in cost-sensitive markets. Then we also have 24 hours access. Unlike the traditional banks that you have, limited hours to the banking timing. Then we also have the integration with payment gateway. Now you can integrate with payment gateway, enabling SMEs to accept payments easily. And also saving and investments. Now there's so many options of savings. Give, for instance, we have the PiggyVest, you have the CarryWise, you have the MoMo Thrift and Saving products also. These are what are entrepreneurs that are young African next generation are actually enjoying right now with mobile apps.
Interesting. And what role are telco operators, what role are they playing to expand mobile financial services across remote communities?
Okay, so we know that telcos are the backbone of financial institutions in Africa. Operators like MTN, which are the owners of MoMo, and also Airtel Mobile, who are the owners of Smart Cash. They have this large agent network that uses different forms of platform, from the app to the USSD, and they are able to reach the rural population without smartphone or internet, right? Internet access. This is crucial because while phone is penetrating into the African ecosystem, right? We also have millions that still relies on future phones. You have the likes of those smart, the small phones that they are not smart, right? Then you have the USS base that is servicing this kind of people. So it is bridging the gap between the banked, the underbanked, and in rural areas.
That the space is becoming saturated, all these apps and different ways to pay, that we don't need more ways to pay, we just need more innovation. What are your thoughts on that?
Yes. Okay, so this is a very critical question, because while mobile apps reduces cash dependency, true financial inclusion goes beyond just digital transaction. It requires access to credit, saving culture, insurance products, and many Africans use wallets for payments but lack tools for long-term financial planning. For apps to deliver a real inclusion, right, they must integrate lending, savings, and investment features, which most of them right now already have.
Interesting. And we know that the tag financial inclusion is set as the intention and the motives for, mobile banking apps. And would you say they are really driving financial inclusion from your perspective, or it's just a way to shift consumers from cash to digital?
Absolutely. With smartphone penetration that keeps rising and fintech innovation accelerating, mobile apps are poised to, becoming the primary banking channel. For SMEs, mobile lending offers speed and flexibility that traditional banks cannot match. And as infrastructures improve and regulatory frameworks matures, mobile finances will likely dominate everyday banking and SME credit access.
Yeah, I mean, I understand that, especially within the rural areas, but urban areas, urban centers, a lot of those who reside there are banked, right? But when we're talking financial inclusion, we're talking some of the rural areas. Are we seeing that transformation? Are they being included, being brought onto digital platforms, or they're still handling cash? And what do you think needs to be done beyond just coming up with more ways to pay to include those, in the hinterlands when it comes to digital payments?
Oh, okay. So, for instance, now, the M-Pesa now, they dominate mobile app for everyday transactions in Africa, making it a household name. Now we are moving from just from the underbank having to travel miles, right, to go and use a traditional bank, right? We also have in Nigeria, we are moving towards the focus. The focus right now is the digital banks, with the likes of OPay, MoMo, Kuda, and there are several lending hubs too, which this underbanked rural youths actually want to also take advantage of it. And also they're not just moving into that. We also, the likes of Egypt and other African countries also have so many platforms, so many things that can actually help them, like the likes of the QR-based payments, and it is not just that they're just putting it out there. This difference reflects local regulatory environments and consumer behavior. So yes, I believe that with the right tool, with the right product, we are actually bridging the gap between the underbanked and also the banked.
And we know that some of these banks and applications were not, I like to believe so, it's not a copy and paste approach. So how are countries like Kenya, Nigeria, Egypt, how are they using mobile apps differently to expand that financial access?
Okay, so just like I said, in Kenya, M-Pesa dominates mobile money for everyday transactions. Yeah, Nigeria focuses on digital banks. So we have the likes of OPay, PamPay, Kuda, and some lending apps also, you get. Then in Egypt, they have a strong push for the QR-based payments and government-banked e-wallets. So these are things that they are trying to use to bridge the gap.
And while there's that drive for adoption of digital, there's also the need for safeguards, especially as we're seeing some of the risk increase and attacks with malware and all of that increase. So coming to cybersecurity now, what cybersecurity risks do you see this mobile finance users facing, and how can providers also protect, their customers?
Okay, so the major risk I would say is that we keep seeing every day are from SIM swap, fraud, phishing, and also data breaches. The solution that we keep recommending is two-factor authentication. We have the biometric login, we have the encryption, and also user education. You always have to tell your customers, you always have to educate them on what to do in case of fraud.
All right. So education is one, and I believe there's also the coding part at the back end when it comes to cybersecurity to safeguard customers. Now, could mobile apps perhaps become the dominant channel for SME lending and everyday banking in Africa within the next decade?
Oh, yes, definitely. With smartphone penetration, that is on the rise right now, just like I earlier mentioned, and fintech innovation. We keep having different apps that keeps coming.
Oh dear. It looks like
their phones. So yes, mobile apps are poised to becoming the primary banking channel, for SMEs and young consumers.
It would be interesting to see that evolution. But thank you so much for your thoughts and insights, Bamidele Fehintoluwa, Head Merchant Acquisition at MoMo PSB.
Thank you so much, and thank you for having me.
A pleasure.